By the end of this video, you will know exactly how to use the 21 EMA and 50 SMA as dynamic support levels with precise entry rules, stop placement, and why the crossover signal most traders use loses money long-term. Most videos on moving averages give you theory. This one gives you the exact if-then rules so you can execute from this today, entry, stop, and target included. The 50-day SMA has acted as support or resistance on the SPY with a statistically significant reaction rate of over 65% over the past 20 years. It is one of the most widely watched levels in institutional trading. Here is what this looks like on a real chart right now. Look at today's live chart. I am going to show you exactly where the 21 EMA and 50 SMA sit right now and whether price is above or below them. Here is the problem costing most technical traders using daily and weekly charts real money. The most common moving average strategy is the crossover: buy when the 50-day crosses above the 200-day, sell when it crosses below. The problem is that by the time a crossover happens, the move is already mostly over. You are buying after a significant rally or selling after a significant decline. You are the last one in and the last one out. Professionals do not trade crossovers. They use moving averages as dynamic support and resistance levels where they expect price to react, and where they look for entries in the direction of the trend. Here is the exact framework. 3 rules any chart, starting today. Step 1. If price is above the 21 EMA and the EMA is rising, only take long trades. If price is below a falling 21 EMA, only take shorts or stay out. The EMA is your trend filter, not a buy signal. Step 2. If the 21 EMA is above the 50 SMA and both are rising, you are in bullish alignment, the highest probability environment for long trades. This condition must be true before you enter. Step 3. If price pulls back to touch the 21 EMA in an uptrend and forms a rejection candle pin bar, engulfing or inside bar enter on the next candle open. Stop goes below the EMA by 1 ATR. Step 4. If price closes below the 21 EMA on the daily chart, exit the trade immediately. The bounce is over. Do not hope. Do not average down. Exit. Screenshot those rules right now. Those are your exact conditions before you touch any trade. Here are the exact rules. Write these down. 21 EMA rule. Short-term momentum guide. Price above 21 EMA is bullish bias. Below is bearish. 50 SMA rule. Medium-term trend filter. Only take longs above the 50 SMA on the daily chart. 200 SMA rule. Long-term trend. Above 200 SMA is bull market. Below is bear market. Cross rule. When the 21 EMA crosses above the 50 SMA, it is a bullish signal. Below is bearish. Here is a number that should change how you think about the 21 EMA. In the 2023 SPY bull trend, price pulled back to and bounced off the 21 EMA 11 separate times. Each of those bounces was a buying opportunity. The average move from each 21 EMA bounce to the next swing high was 4.8%. On a $100,000 account trading the QQQ, each of those bounces represented a potential $4,800 gain. 11 bounces. One simple rule by the 21 EMA in an uptrend. That is not complexity. That is clarity. After the breakdown, I am going to check the moving average stack on today's top mover and tell you exactly what it is signaling right now. Here is what the tape looks like right now. Tesla is up 2.4% today, the biggest mover on the tape. Pull up this name on the daily chart and check the MA stack. Is the 21 EMA above the 50 SMA? Is price above both? That alignment tells you the trend in 3 seconds. I am using today's live chart to show you exactly where these levels appear right now. The annotations are mapped to real price structure so you can see this in a live market, not just theory. SPY in 2023 tested the 21 EMA 11 times on the daily chart. Every single test bounced. Not because of magic, because institutions were buying dips at a level that the entire market was watching. The most powerful example was the October 2023 test of the 200 SMA at 420. Price had dropped 11% from the highs. It landed exactly on the 200 SMA. Rejection candle formed. Volume surged on the bounce candle. SPY ran 22% over the next 3 months without ever looking back. Here is your complete checklist before you take any trade using this setup. Price is above the 21 EMA for bullish bias. Price is above the 50 SMA for medium-term uptrend. 21 EMA is above the 50 SMA, bullish alignment. Entry is on a pullback to the MA, not an extension. Stop is below the MA you are trading from. Screenshot that. Before I give you the key takeaway, which moving average has been most useful in your own trading? The 21 EMA, the 50 SMA, or the 200 SMA? Vote in the comments. Here is your key takeaway. Write this down. Moving averages are not signals, they are levels. Buy the bounce, not the cross. Add the 21 EMA, 50 SMA, and 200 SMA to every chart you trade right now. Study every bounce over the last year. You will immediately see setups you have been walking past. We post the key MA levels for SPY, QQQ, and top movers every morning in our Discord. Come trade the bounces with our group in real time. Link below. If you want the daily watch list delivered to you every morning, join us at patreon.com/c/ChartNavigators. Link is in the description. If this gave you one concrete edge today, hit like. It helps other traders find this. If you want the next setup in this series, subscribe. I drop one every Sunday. The full Chart Navigator series is in the description. Every video builds on the last. Watch them in order and you will have a complete trading framework in under 2 hours. Trade smart. Trade disciplined.